Welcome to Infinity Capital, everyone. My name is Raj. So today we are going to discuss Century Plyboards. So Century Plyboard is a very old company. It was formed in 1982 by Mr. Bhajanka and Mr. Agrawal. So this company manufactures plywood, veneer, laminates, MDF. This is very extensively used in a lot of new furnitures. So it's a compressed ply, right? And it's used by a lot by IKEA as well. Not in all of their products, but a lot of their products. Pretty much looks like the future of the furniture industry, wherein you have a set dimensions. So you just bring these MDFs and you put them into place and make your own furniture. Relatively easy to make furniture out of this. I have a cousin also who works with a private company which manufactures MDF, and they've seen fabulous growth. So this particular private manufacturer has a factory in Gurgaon, and they've invested around 100 crores in their MDF factory. They are on huge expansion mode right now. So if we come to the profit and loss and click on product segments, if you see, the MDF sales has gone from 7 crores to 359 crores. So currently MDF sale is roughly about 30% of the total sales of all the products. Then it is highly likely that it will surpass laminates as well, because if you see the growth in laminates, it has only become double since 2013. And if we see the plywood and allied products, growth is actually, it's down. So plywood and allied products sales growth is actually going down. It's gone down from 1300 crores to 1100 crores, right? So clearly, if you see, the growth is in the MDF. All right, the growth, plywood and laminate degrowth. There is a degrowth in these stuff as well. Okay, so this is all I wanted to show you guys from the MDF perspective. Right, so they are a leading manufacturer with 25% market share, but this is a very fragmented industry. So 70% of the market is with unorganized players, and when there are too many unorganized players, you will have a lot of price cut competition. People would want to sell it at a cheaper cost and so on and so forth. But in my opinion, COVID has brought pain to the unorganized market. So if any financial crisis will bring a lot of pain to the unorganized market, because the unorganized players don't have access to liquidity, to bank facilities, to OD, to cash. They cannot survive, and they don't have that kind of goodwill in the market. So a lot of these players might get wiped off also in the past year and this year of COVID issues. So as lucrative as the unorganized market sounds, plus we have the GST is getting more formalized. So this unorganized market is actually going to go down, in my opinion, in the long period, because over a period of time, with GST and everything becoming more mainstream, these guys won't be able to survive in the unorganized market. I'm not saying the unorganized market will get wiped off altogether, but it is going to go, the percentage is going to go low. Okay, so plywood accounts for around 53% of its revenues, laminates 21%, and medium density fiber, that's the MDF, around 15%, particle boards around 4%. Okay, so they have around 2100 dealers, 25,000 retail touch points, around 613 cities. So you need excellent distribution network to sell your products, because it's a B2B sort of a business. All right, and it has proprietary infrastructure. They have around 30 pan-India marketing offices, 12 manufacturing facilities. So they are strategically located, obviously, because you can't have one plant in Delhi and supply it to all around the country, because it's going to be very expensive, the logistics part. All right, so they have around 239,000 tons of cubic meter production capacity in plywood, 7.5 million sheets in laminates, and 198,000 cubic meters in the MDF. So if you see, the MDF capacity is quite close to the plywood capacity. Another reason why I believe that MDF is going to be the strong revenue generator for them in the coming years. Particle boards, it's around 54,000 cubic meters. All right. And production, so it's at working at 79% capacity utilization. Laminates is at 102. I don't understand how a capacity reaches 102%. MDF at 82%, particle boards at 116. So I'm not really sure how they've derived these numbers, because a plant can only reach 100% capacity. How can it generate more than it can? So we'll probably have to, excuse this piece of information here. Now coming back to the 25% market share. So once we come on Naukri, Tijori, we'll find out that even they are quoting this 25% market share. And this has come from their investor presentation. Just a second. This is from where? Just a moment, guys. Is this from the company's investor presentation? Just a moment, guys. Yeah, it's from the company's investor presentation. All right. And one quick thing I'll also like to show you is the net profit margin has been within the range of 7 to 8.5 in the past 5 to 3 years. Currently, the net profit margin is around 6.5. So there is, growth. There is chance for growth of around, say 10 to 15% in the net profit margin as well. All right. Apart from that, there's cash flow from operations has grown at a CAGR of say 8-10% in past 4 years, 20% in past 5 years. So pretty good cash flow from operations, they've been generating. All right. From the credit rating report, there is a credit rating report here. So quickly, I just want to show you on the balance sheet, they were able to shave off their borrowings because they had cash accruals, and because of that their borrowings has come down by roughly 70%. So that's a great thing. So their fund CP, commercial paper program, they've paid it off, right? Apart from that, earlier their limits were around 943, now it's only 500 crores. Outlook is revised to stable. Okay, so what other information can we gather from here? Improvement in operating profit margin, so that's around 14.8%. Okay, and so overall, just a second, guys. I'll just show you. Yeah, absolute profit and cash accruals will also be impacted despite various cost reduction initiatives. So this particular credit rating is from last year in July 2020. So the credit rating has become much better as of now. So this is a year-old credit rating. After that, there has been no credit rating. That is the reason why I am going through the latest one. All right. So what are the strength of the businesses? Obviously, favorable financial risk profile. So their margin has become better. And they are a leading manufacturer of plywood, 25% market share. They have a wide distribution network. Manufacturing locations are strategically located. Experienced promoters, right? They've been in the business since 82, so they have roughly 42 years of experience in the industry, right? What are the challenges in the business? So highly fragmented nature of the industry. So obviously, because 70% of the market share is with unorganized player, there are too many players, fragmented. So there is intense price competition, right? So that is one problem. Working capital intensive. So they have, a lot of their working capital is stuck, inventory and various products, because they make different types of products. So they need to have those kind of inventories. The more SKUs you have, the more inventories you'll have, because you make 400 products, then you'll have to have inventory of all those 400 different products. So think of it like this way, it's like Nike, they make like 600 products in clothing, shoes, this and that, caps, socks. So imagine the amount of inventory they have to keep in each and every product. So it's the same case with advanced enzyme as well. Different business, but they have around 450 products, types of enzymes that they sell. So even their working capital is pretty high. So yes, something to keep in mind. I mean, I'm going to keep this stock for the next 2-3 quarters. So, but still, it's good to know. I always like to read about these things. It gives us more insights in businesses, right? So, currency fluctuation, because obviously raw materials is imported, because we import a lot of wood from outside. All right. So that's that. Healthy cash flow of operations, 330 crores in FY 2020. That has all become, so cash flow from operations have been great. So that's what they are talking about, right? And that's it from the credit rating. Important development from the conference call. If you see here, they've taken BCG, Boston Consulting Group, so these guys will be advising them on how to basically, save cost and, enhancement of business opportunities of saving in MDF division, logistics, power, so on and so forth. All these things. How can they save power? They could probably set up a solar a plant which will, power the factory. If you look at clean science and technologies, very significant portion of their plant is powered by solar, right? So they will decrease the operational cost by that. So that is one of the developments. And apart from that, there is something else also. Just a second, guys. Just a second. Their working capital cycle is now at 69 days. So the working capital cycle has also come down. So these are the two things that I wanted to show you over here, right? Let's quickly go through the screener. So what do we have here? Very interesting. If you see, as compared to last year, DIIs have increased their stake. FIs has gone down, not so much. Public has lost almost 1.5-2% of the stake. So basically, institutions are actually buying this stock, right? Another reason why, this stock is up from 100 to 400 in the past 1 year. Okay. And if you look at the cash flow, pretty robust cash flows. Balance sheet, 137 crores of borrowings, but they have 111 crores of investments, 91 crores of cash on the book. So pretty good in terms of, how the balance sheet looks. No dilution in equity. Very good. Profit and loss front. What do we have here? So basically their sales were stuck in this range, 2000 crores, 2200, 2100 crores. But now the sales are sort of going up. Okay, their margins have also increased. So earlier they were enjoying margins of around 16-17%. So then the margins have dipped. Last year obviously margins dipped, but then the margins have recovered. So that's a good sign. My guess is that because of this 2 years of COVID, a lot of unorganized players may have gotten wiped off. So, it will allow them the opportunity to basically gain market share. Interesting thing is, guys, if you see, their sales sort of peaked out in 2012, and then they were sales were down for 4 years, and then sales started picking up, and then it peaked, sort of went sideways, right? So why am I looking at this stock? So if you see 2018, 17, 18, their profitability sort of peaked out in this range, and now the profitability is back up. So what is happening in the stock? Just a moment, I'll show you a couple of other things also. Quarter on quarter basis, there is a clear acceleration. December numbers were higher, March numbers were higher, June numbers are definitely going to be higher because last June we had a pretty severe lockdown. Now we'll wait for the next quarter and see what's going to happen. The margins in June number are low, could be low primarily because March to June there was a second wave lockdown. So we'll have to wait and watch in the next quarter what sort of margins are coming in. Something that we need to take care of. We need to observe. On the P ratio front, this is pegging at 38.9. So in my opinion, it's pretty high, in terms of P. So I would like to wait for either for the earnings to start coming in. So only if earnings come at a higher clip, the P is going to go low. If not that, then probably we'll see a time-wise correction in the stock, because at a P of 38, 39, I don't see any visibility in terms of earnings. Although their margins have gotten better, their sales is not up by a lot. Pre-COVID they were doing 2280 crores of sales. Now they are doing 2385. So then we need to see significant amount of um acceleration in their sales also. Now sales can only go higher if there is more demand from the market. So we are seeing that cement companies are posting record profits. So if where is ply needed, it's needed in furniture. So it's a cyclical business. So if we see demand sort of picking up in either home building or in other infrastructure places, primarily these sort of plies are used in homes, right? So if we see a demand picking up in homes, then we can see some sort of growth in sales. Another way of the sales going up is they increase their capacity, but you can't just increase capacity in a few months. So they might come up with capex plans. So we'll have to find out. So we'll have to wait and find out if they are planning any capex or not. They have decent amount of cash flow from operations, so they can do capex. All right. So from the PE front, it looks expensive. So now what sort of strategy can we have? So when we click on the weekly chart, if we see in April, the price was around 350. Okay. March, April, basically 2018. In 2018, they were doing around 163 crores of PAT. Now they are doing 234 crores. So this is roughly up by around 70 crores. So their profitability is up by around 40-45%, right? And if we consider the price from March is up by around 15%. So we can expect a good 30-40% uptick from here, in my opinion, in this stock. Another thing is that if you see, that every time the stock is correcting, it's correcting on lower volume. But now this has gone sideways since May. So my guess is that this should probably correct a little bit, because the PE is pretty high, so it should correct a little bit. So where will I be looking to add the stock? I'll be looking to buy the stock within this range, between 280 and 330. I'll be comfortable to buy the stock between 280 and 330. Why? Because, from the all-time high, it would have corrected by 30% or so. Okay. And once it corrects 30-35% from its all-time high, or if we take it from the current price, if it comes till 290, 280, it would have corrected 30%. So a 30% correction would obviously deflate the PE as well. And then by then, we'll have the next quarter results. Then we'll see what sort of, earnings are coming in, and we can enter the stock. Also, the market is pretty in a pretty hyper mode right now. So buying a very high PE stock can really hurt us also. I don't mind buying a high PE stock in a sector which has tailwinds, like APIs or possibly some pharma companies, CDMOs, or some agrochemical companies. But difficult to pay 38 PE for this stock. Although I'm going to keep it on my radar and start buying it between 280-300 sort of a price point. Obviously, once it comes there, I will see how the market is moving and then take a call on this. But from the overall, numbers, it looks pretty decent. One can make decent money from this stock. If we do a peer comparison, so there's some stupid peers they have named over here. Obviously these are not the peers of Century Plyboard. So I'll come up with a video with the peer comparison as well, guys. So this is it from my end. Just remember, this is an educational video. It's not a buy sell recommendation. And thanks a lot for watching, everyone. Thank you.